we will be looking at the financial ratios. If you'd like, it'll be more the fundamentals on the financial ratios. Yeah, let's go into the slides. So what are the basics on financial ratios? So what are they, how are they calculated, and why do we do it, and when is it done, on what occasions are we looking at doing it? So these are some of the basic fundamentals. If you are a fresher in financial area, if you are a university person, or you're new in your high school and you're looking at all the financial ratios and basics, I think this content will be very appropriate to you. Yeah, so what are financial ratios? So they are nothing more than basic calculations. So they are mathematical calculations. We use couple of items or variables in your financial statements, and you perform a calculation, a mathematical calculation on those variables. So how do we do it? So for example, in the financial statements, we have profit and loss statement, and say you want to understand the gross profit ratio, then you take the gross profit, you take the sales value, then you just use the gross profit as your numerator and your sales as your denominator, and then you basically calculate the percentage, and that becomes your gross profit percentage. And the same thing applies for net profit. So your numerator and your denominator is basically two items or two variables that you need to pick from your financial statements. And also, like it could be your profit and loss statement, or it could be your balance sheet. All right, now why do we perform financial ratios calculation? It is to identify the financial health, within double quotes, financial health of the company. So when we talk about our personal physical health, we do have certain parameters. We go to the doctor, we get it checked, like we check our blood pressure, we check our sugar levels, we check our weights. So that's for our physical health. We check it on a time-to-time basis. So similarly, we also need to check the financial health of the company, and financial ratios are one of the basic steps that is like simple, straightforward, at the same time very effective in identifying the financial health of the company. Okay, the next is like when do we do it? So there are scenarios when the company decides to perform the financial health check of the company. One of the most popular key scenarios is valuation. When you would like to value the company, you do this simple but most effective calculations. And for students, the basic necessity would be to give your exams. But yeah, from a real life scenario, real world scenario, when an analyst, when an investment banker, anybody who's in the finance field, like corporate finance, if they want to gauge the financial health of the company, then they perform these calculations. And there are different types of ratios. It's simple, but it's got like a variety of it. I will go into the details of them slowly, but let me just give you a flavor of it. So we have broadly 5 different types of financial ratios. So we have liquidity ratios, leverage ratios, efficiency ratios, profitability ratios, market value ratios. For example, I was giving you an idea about the gross profit ratios that would fall under the profitability ratio. We will go into the details of these in the next video, but I hope this video is helpful and it has given you a flavor of what ratios are, what are the basics, what are the fundamentals, how, when, what, where, who does it. So, well, all the basics around it. Yeah, that's about it. And thank you for watching. Thank you for all your ongoing support. Looking forward to share more content with you in the near future. Take care. Bye bye.